Alright everyone, welcome back to Crypto Brain. At the moment, the crypto market appears to be entering a very unusual phase, and even experienced investors are beginning to pay extremely close attention because for the first time in quite a while, it feels as though a new narrative is quietly being built inside Wall Street, and that narrative appears to be centered around XRP. Across social media and financial discussions, investors are now asking a very serious question. Are institutions beginning to increase their XRP exposure behind the scenes? What makes this situation even more interesting is the fact that this conversation is no longer limited to crypto influencers or retail traders. XRP is now increasingly appearing inside broader discussions connected to traditional finance, digital infrastructure, blockchain settlements, and the future of global payments. History has shown us something very important about Wall Street. Institutions rarely move publicly at the beginning. First come the signals, then come the investment products, then the narratives begin to spread across the market. And only afterwards does the wider public realize that a major shift had already started months earlier. And right now, many investors believe that XRP may be entering exactly that type of phase. If we examine the latest developments carefully, one of the biggest talking points has been the emergence of active crypto ETF products that now include XRP alongside assets such as Bitcoin and Ethereum. That alone has surprised a significant number of investors because traditionally most institutional crypto products focused almost entirely on Bitcoin exposure. But now XRP is increasingly appearing in conversations linked to future financial systems and blockchain infrastructure. And psychologically, this matters far more than many people realize. Large financial firms do not randomly choose assets for regulated investment products. Institutions focus on assets they believe could have long-term utility, future liquidity demand, and strategic relevance within developing financial markets. And that is exactly why confidence amongst XRP supporters has continued to grow. At the same time, another important narrative has started building across the market: institutional accumulation. While many retail investors panic during market corrections, institutional investors often view lower prices as opportunities. This has always been one of the oldest dynamics in financial markets. Retail reacts emotionally to uncertainty, whereas larger firms quietly build positions during periods of fear. That is why a growing number of investors now believe Wall Street may no longer be viewing XRP simply as a speculative cryptocurrency. Instead, many believe institutions are beginning to examine XRP from the perspective of payment infrastructure and future settlement technology. And then we arrive at the Morgan Stanley angle, which makes this entire discussion even more fascinating. When major financial firms such as Morgan Stanley openly acknowledged Bitcoin, Ethereum, Solana, and XRP all serve completely different purposes, that signals a major shift in institutional thinking. Traditional finance is no longer treating crypto as one single category. For years, many institutions viewed digital assets primarily as speculative instruments, but now the language is changing. Conversations are increasingly focused on tokenization, blockchain rails, cross-border liquidity, settlement efficiency, and digital infrastructure. That shift in narrative is extremely important, because once financial institutions begin discussing infrastructure instead of speculation, the market starts entering an entirely different phase of maturity. Morgan Stanley's growing digital asset strategy has also attracted significant attention because large wealth management firms do not aggressively expand into new sectors unless there is rising client demand behind the scenes. Institutions rarely deploy billions overnight. First, they test narratives, then they introduce products, then they provide clients with exposure, and over time, adoption gradually accelerates. This is precisely why many experienced investors believe the current stage of the market could still be only the beginning. And if you look closely at how financial conversations are evolving globally, the discussion is no longer simply about buying crypto. Now the focus is shifting towards tokenization, towards real-world assets, towards faster global settlements, towards seamless liquidity movement across borders. And this is exactly where many XRP supporters believe the XRP ledger could eventually play a major role, because XRP's core narrative has always revolved around speed, low-cost settlement and efficient cross-border transfers. In fact, several analysts and financial commentators are increasingly describing XRP not merely as a cryptocurrency, but as a potential payment infrastructure asset. Now, obviously, it is important to remain realistic. The crypto market remains highly volatile, and no prediction is ever guaranteed. Speculation will always exist inside this industry, and investors should always manage risk carefully. However, one thing is becoming increasingly difficult to ignore. Wall Street's interest in digital assets continues to grow rapidly, and XRP repeatedly appears in the middle of discussions connected to blockchain infrastructure and the future of financial systems. And this is precisely why another powerful theory is spreading quickly throughout the market. Many investors believe that if regulatory clarity continues improving, if ETF adoption continues expanding, and if institutions keep launching XRP-related investment products, then the next phase of the market could become significantly more aggressive than most people currently expect. At the moment, many investors are still discussing $1 or $2 XRP targets. But historically, institutional narratives rarely stop at small expectations. Once large-scale adoption accelerates, price discovery can change dramatically. And that is exactly why social media has become flooded with one particular narrative. Wall Street says we support XRP holders. We're all in buying. Now, whether that proves to be early signaling or simply market excitement, only time will tell. But one reality is becoming increasingly clear. Smart money is no longer ignoring the crypto market. And if institutional adoption around blockchain infrastructure continues expanding over the coming years, the assets connected to those systems could eventually become some of the most important financial products of the next generation. The next few months could therefore become extremely important, not only for XRP holders, but for the entire digital asset industry. Because what we may be witnessing right now is not simply another crypto cycle. It could be the early stages of a much larger transformation in how value moves across the global financial system.